I think the most important thing for people to bear in mind and realize here is, look, we've had the recession. We're through the recession. We're in a new investment cycle. There's a lot of uncertainty around what happens next month and the month after with the path of the virus back and forth. And it's almost a fool's errand to try and get that right on a monthly basis. But if you put yourself into the mind and realize, okay, we're actually in the next investment cycle, it's early cycle. What does the early cycle playbook look like? Well, history tells you should be long risk assets. Now, we all know valuations are pretty stretched here, so we're fully cognizant of that. But following that playbook, I think you should still be long risk, even at these levels.
Patrik, the question I have, though, is part of what's helped us get through the recession, well, a huge part of it is coming from central bank stimulus, which doesn't seem to be going anywhere, as we expect to hear from Jay Powell later today, but also on the fiscal stimulus side. I mean, things like furlough in the UK, things like what's happening with unemployment benefits in the US, which are now in doubt. And when those programs expire, do you worry about additional risks from there, added to the fact that the path for the virus is less clear?
I think you absolutely have to worry about these factors, and as you say, unprecedented. We like using that word at the moment, but unprecedented amounts of stimulus have got us this far this quickly. So there's certainly the risk of bumps on the road as we sort of have to hand over from the government stimulus to the private sector still. So yeah, absolutely, we could have bumps on the road, but I think you've got to come back and ask yourself, okay, do you think on a 6 to 12 month view, do we go back into recession? And we just think that that's pretty unlikely at this stage. And as far as central banks are concerned, well, they may not be adding to stimulus at the moment, but the stimulus that's ongoing is still pretty powerful, and financial conditions are pretty easy. So, we do think central banks will continue to be easy, and that will continue to be a positive for markets.
And you've already told us that you like Asia in the basket of EM. I mean, anywhere in particular that you would highlight that looks strong to you?
Within Asia, look, I think it's still about the North Asian manufacturing side. We think China also has further to run. Clearly not at the speed that it's been going, but those are still the areas that we like. Japan for us is a separate consideration because it's a developed market. And there we've been more neutral. In Japan, the situation is a little bit more murky, so we'd be a bit more cautious there.